Yeah. Back tapped. Oh shit. Gotta send them. Send them out. Yes, sir. Nah, bro. We always live Tuesdays, man. Tuesdays. That's
Who's that?
me. Tuesdays today. Market Mondays is on Monday. We do the review Tuesday. No days off, man. Stay at it. What up, Karen?
Boom. Yo.
Tell John I said what up.
How y'all doing?
Yes, sir. Chas, live in the building.
Chas.
Got a good show for you guys tonight. Gonna touch on the market. We're gonna touch on this JP Morgan report, Kanye, Canada, tech decline, Dow trying to buy the Broncos, Vladimir Putin, a couple more things.
How y'all doing? Appreciate y'all stopping by. Welcome to the Squared Knowledge. You know what time it is. You know, we give that information to y'all, that knowledge to y'all.
Yes, sir.
Give you the highlights.
Highlights of the past week. Doesn't stop.
And this is just peach tea, by the way. Peach tea. That's it.
Peach tea. Okay, again.
I promise you, that's all it is. Nothing else in there.
Nope, no pineapple
Tuesday,
juice.
y'all. It ain't that serious. No pineapple.
He be going in. Man. Who thought they were gonna wake up to snow though?
You feel me? I was hot. I am so ready for that. And I knew it was coming again because it always does this out here. You get it, and then it goes away, and all of a sudden, you know, in a random month, either, you know, February, March, or April being the last month, we get something. Every time.
Mumskis live in the building. What up?
What up, beautiful? How you doing? How much did you guys get? A lot over there, or was it just a little sprinkle?
No, yeah, it wasn't. It didn't stick or nothing.
Okay.
Yeah. So yeah, man, we're getting ready to begin another Market Monday review brought to you by yours truly, D-Time and me, D-Time and I, Square Knowledge.
Yo.
Episode number 9. DB, what up?
The Boundra. I wonder if he hates that, because I'm never going to stop saying it. The Boundra.
All right, yeah. Let's dive in, man. 5 minutes past.
Let's tap in. Let's give it to him.
Let's cover our butts before we start. All right. Yeah, like I said, another Market Monday review brought to you by Square Knowledge. We're going to give you guys these highlights before we get started, we are not financial advisors or CPAs. Our content is for entertainment and educational purposes only. Trading and investing has considerable risk. Please do your own research. Please do your own analysis for your own circumstances. And please consult with a financial advisor. Yeah. All right, I touched on it a little bit when we were just getting going, but we got a few different topics for you guys. We're going to start with basically just an overall market update, so followed by the JP Morgan report, and then a few other things. So let's dive in. All right, so the NASDAQ QQQ has been negative for the past 12 months. The S&P 500 has been up. I always forget to say it after we cover our grounds, but this is all information provided by Ian Dunlap, Troy Millens, and Rashad Bilal. These are the guys that give us all this great info at the Market Monday, so we're giving you guys a highlight. Thank you to those guys at EYL and the Market Monday Review.
EYL, appreciate you. They legends, man. They really giving us the game. So y'all tap in with us, tap in with them Monday night. We're just kind of the highlights from.
Yep. So they opened up the show. We're talking about how the NASDAQ is down over the past 12 months. It's been negative for the past 12 months. The S&P though, the S&P 500 and one other, I forgot their name, but the S&P 500 is up. Ian's prediction is it'll be probably about 18 to 24 months of some pullback, some negatives going on with some recovery in October. October is usually a positive month, so expect some recovery in October. One of his points was, in times like this, not even just in times like this, in all times, your strategy, you want to make sure your strategy works in all markets, right? With that being said, he doesn't expect it to be an overall negative year. He thinks it's going to be modest returns of about 6-7%. It won't be huge gains like the past year and a couple of prior years of 20 to 30%. His predictions are for a 6 to 7% return. Modest return, more than what your money's going to get you sitting in your wallet or in your bank account.
Mm-hmm. And that's something. Obviously, if you're new to stocks, or if you're in it through the COVID era, or in 2020 when it was going up 17% and plus that was not the norm. So this is kind of bringing it back to what the stocks usually does. So that was another topic that they're talking about.
Also, Troy touched on how January usually sets the trend for the year. And as we know, January, there was a lot of pullback in January. I'm trying to look at the VTR real quick for January. January. As soon as January happened, that's when all the pullbacks started happening. So, we could be in for a bitter one, a cold one. But in my opinion, I'm kind of excited about it because it's gonna give us a lot of great buying opportunities. So,
a lot of entry points. So just be on the lookout. Check your stocks, check all your ones, and just keep eye on them.
Yeah, exactly. With that being said, a lot of people are kind of wondering, so since it's in a pullback, should you have your money on the sideline and should it sit? In Ian's words, you should not have no money on the sideline. You should be in the game, investing in top 5 companies or 2 tech, 2 index, which is his model.
2 tech, 2 index.
Yeah, which we've probably said every episode by now. 2 tech, 2 index is Ian's motto. His 2 tech are Microsoft and Apple. 2 index is VTI and VOO. So,
What up, Ebby? Appreciate you stopping by, man.
So,
Get that knowledge.
So go with the all-stars because it's expected to be down over the 18 and 24 months. Go with the all-stars. Go with the guys that are going to get you your returns. Go with your LeBrons, your D-Wades, your KDs, your Giannis's. Go with those guys. It's going to be bitter 18 to 24 months. So you don't want to play around with the companies that aren't really proven because things are going to be tapering back. So go with those top companies. It's time to go with the all-stars.
Yes, sir.
So yeah, trying to keep it quick and easy for y'all. Any questions? Go ahead, shoot them. That was the market segment. So now we're going to jump into the JP Morgan report.
JP Morgan. So yeah, obviously, Chase. Basically, right now he had a headline or said that there's 10 stocks that will be underperforming this year. And just a quick overview. Ian, who's kind of the guru of investments, listed 4 of them that he thinks that will hold up or stay strong within this downturn that we're in right now.
What up, Bedrock?
Target, McDonald's, Microsoft obviously is a head honcho right now that they believe, that the team believes, and then Dollar General was another one. So these ones obviously when a recession hits or when crisis hit, when the economy hits, these are the stores that everyone goes to, right? Because we still got to put food on the table, we still got to feed our family, we still got to do all that stuff. So these are the ones you go to. Obviously, you prefer to go to the high-end stores, the Fred Meyers and even all the other ones but these stores, Dollar General, Target will always, give you that bulk.
Yeah, your bargain stores.
Yep, your bargain stores. So even though Chase, these are just a few of them. Obviously, check out the episode from last night. You can get the list of the 10 stocks, but these are the 4 that Ian kind of protested on, that saying that Target, McDonald's, and Microsoft and Dollar General will hold up. They'll stay strong through the test of time.
Also, ELLY. I think like 9 of them here. I'll just name them off. I have their tickers. So DG, McDonald's, MCD, TGT, Microsoft, Zoom, mRNA, Moderna, ELLY, EXC, and DME. So yeah, just to touch on what you were saying, Darius, like the Target, Ian, he wasn't quite sure why this report is saying that companies like or stores like Target and Dollar General and stuff would be down, because if we're expected to possibly go into recession or the market's pulling back, those are the types of things that people are going to be shopping for. Like you said, you're going to be looking for the bargains. You're not going to be looking for your the highest price to go spend. So yeah, McDonald's up, Target up, Microsoft up. Zoom, he said, is down, dead. He's not feeling Zoom. ELLY, he is feeling. And Moderna he wasn't for it, or he wasn't against it either. Moderna made some news with their CEO supposedly selling a large position, $400 million.
Not sure if that's true, but that's kind of, they were kind of
but then there was also a report saying he didn't sell. So, he thinks long term they'll be okay. He thinks the price, I got it here, the price should settle around 175. Corona isn't going anywhere. So I think Rashad was saying he thinks it's gonna be a seasonal thing. So vaccines, they don't think are gonna really go anywhere either. So he thinks long term they should probably be all right. But I have up arrows and down arrows for each company that they listed, and for Moderna I have like 2 arrows pointing sideways, like it's hovering. So I mean, and it makes sense. Like Target and stuff, he said, will boom in a recession. Those bargain companies are the ones that should boom in a recession. Microsoft, he has no clue why. He thinks they have an indestructible business. And a lot of things in the report too, we got to understand, like we talked about last week, I think it was, on how a lot of news and stuff can be to play on your emotions and to trick you out your spot. Who knows what JP Morgan has up their sleeve, what they're trying to do with putting this report out, but take it with a grain of salt.
And the reason why it's what's up, JV? How you doing, man? appreciate that workout today. But the reason why they could, Trey and then the team, the EYL
Troy,
team have,
I'll be a part of their
Moderna
team though.
side. They have it, they have the side arrows, or they're kind of, keeping it stagnant because during the COVID era, Moderna was it up like 400?
Yeah, it was. Yep, and when Corona was first coming off and people were hearing about Moderna, it was in the 400s.
Mm-hmm. Yeah, so it was up. The price went up to like 400 really fast. And so what Ian kind of says is it's something along the lines of anything that goes up really fast usually comes back down.
Oh yeah.
And as Trey said, that they expect it to get hit, around the 100 range. So obviously it went up to 400 during the COVID. But they, like he said, COVID ain't going anywhere. Obviously, we're gonna have to deal with it year after year, probably just like the flu. Maybe, who knows how it's gonna work. And then they're probably one of the top 3, top 4 companies that provide us with the the COVID vaccines.
So long term, Ian, he thinks they'll be fine. Just to touch on those high swings, like you were talking about, high swings are good when you're on the good side of it. But when you see a company, skyrocket up, it's like, yeah, wow, it's thrilling. But just know, companies that skyrocket up, they can plummet the same way in the opposite direction. So it's really, when you see a company skyrocketing up, it's not considered healthy, even if it is in the positive. It's not considered a healthy game.
Mm-hmm.
Usually when price skyrockets up like that, the savvy investors will start to kind of look for their exit points. So, yeah. Yeah, so that was our the JP Morgan report. On we go. So next up, they touched on Kanye. He made some news with Donda 2. Yep, with Donda 2 being
got his documentary out. He's pubbing right now. I mean, he's definitely doing something right now. He's trying to make it happen. But go ahead.
But he made news with offering the Donda 2 album only on STEM Player, right? So
yep.
It's making the news because there's a lot of move with artists and entrepreneurs going this way of controlling everything themselves and keeping the profits for themselves. So that's a big thing. We're not going to touch too much on it, but it was like a slight highlight in my opinion. Him offering an album on a STEM Player allows 100% of the profits for himself. So.
Yeah. And then the one thing I'll add to that, and we can move on, is someone like Kanye, he can afford doing something like this because obviously we don't know how much he paid on the back end to get the STEM Player to own that and all that good stuff. Or can other artists do the same thing? Maybe not just yet, but it's definitely tapping into the NFTs, the blockchain, and the crypto kind of the side to where you have more control. You know what I'm saying? So you're kind of seeing everything kind of leaning that way, a little bit more. And I think Kanye West being, someone that, is crazy. So, we call him crazy, but, the team think this was a great move. Because obviously, I think artists are getting 12% off of their streaming. And then he basically is going to get 100% off of everything. And he made, in the first 3 days, he made a lot of money. So just off a STEM Player. So it's definitely a difference. Definitely a different game plan. And he was the first one to kind of tap into it. He might spread the wealth and offer the licensing to Steam Player to other artists maybe, and then he'll even get even more. Who knows what's going to come down the road. So definitely tap into that. That was something, but a little small highlight from that.
It's just there's a shift right now to the creators having more control. So, yeah. Next up we have Canada. Canada has been in the news lately with the trucker protest. If you guys haven't heard, the company has frozen people's bank accounts. Anyone who has had anything to do with the protest and the strike, whoever's donated, whoever's like GoFundMe, that they had like a $9 million account for for the truckers, and that was shut down. So you know, this has potential to shake up the market, and it also makes a strong case for crypto because government can't shut down a crypto account, unless you give them access to that. So yeah, it's definitely concerning what's going on, especially since it's so close to home. A lot of people, me included, never thought, at least, especially a government so close to home, right above us, Canada, that would exercise their strength like that, and start and show what they're capable of doing. But
the fact that they're able to do that, like, what I'm saying, to be able to, without any legal or, they're able to just freeze accounts, which is crazy. So that just kind of shows you that, what power do we have? And then, with Canada, with the free healthcare, the free, even though, you kind of like that, but on the other end, it's kind of a double-edged sword that Rashad was talking about, is they have more control over what you say, what you do. So the fact that they're able to freeze accounts and freeze everything that was going on is, and then what Troy was saying was how they're able to do that. Like, are they using, how are they supposed to pinpoint a person that's fully active in the protests without getting the name or number or whatever? They're basically, are they using facial recognition? Are they, what I'm saying? So it's real interesting how they're doing it, how they're going about it, what they're able to do without any say so. They're just doing whatever they want. So it's very interesting. And like you said, that this could be a move towards, crypto to be financially free, to be in control of your money at all times. Yeah. So it's a very interesting play for sure.
See a few people joining in right now. What's up, y'all? Appreciate the love. AB, Malachi,
Abigail,
what up? Thanks for tapping in. But yeah, also why this made news is because I guess some Canadians are withdrawing money out of their bank accounts. And what that is if it happens at a mass scale, it's called a run on the bank. And if there's a run on the bank, everybody goes to withdraw their money from the bank accounts. The banks don't have all of our cash there, so that could severely shake up the market, So it's something to keep our eyes on, keep paying close attention to. So yeah. We'll move on now to a few companies in the tech sector: Square, PayPal, Marketplace, Zoom, Shopify, Facebook, Netflix. There might have been a couple other that I missed, but those are most of them, I'm pretty sure. Those have been in a great decline. I think something about $1 trillion total. Shopify and Square, in Ian's words, he thinks those ones will be good. Square has plans. They plan to roll out their plan, I guess it is, come June, July, I think he was talking about. So, he still likes Shopify and Square. They just, got some shaking up to do. And also with that, they talk about buying points, right? You want to mark off, like we've talked about this already before, but for some buying points for good companies, obviously you want to mark off 50% and 75% off of the highest, and those are great buying points. So something to look at for some of those companies. Do your research, please. 175 is the number that Shopify, I don't know, what is that ticker? Ian thinks 175 is a number that Shopify will settle at. So that's something to look into there. PayPal, he's not big on PayPal. Wall Street
is in trouble.
He thinks PayPal's in trouble. That was one of Wall Street Trappers. He's another guy who has a big following. But that was one of his picks for the year. So, something to look into. He doesn't like PayPal because he doesn't know who their star players are on their teams, as far as like their CEOs and stuff. Yeah. It's down. Oh, what was that? Oh yeah. Down to, dang, what is PayPal? I want to look at their ticker real quick. Is it PYPL? Yep. Okay, yeah. So it's at 103 right now. He thinks PayPal will go down to around $80, and he did say he thinks it's going to be okay in a couple years, but he just doesn't think.
He just said their customer service, because he said he had trouble with them, personal hiccups with them, but I think he said that they did fix everything, but it took forever, forever to get it right.
Yeah.
There's no one to call, stuff like that. So he just said the whole infrastructure is not up to par with everyone else.
Yeah. So yeah, that was just a quick little rundown on that. We'll move on to now. The Denver Broncos are in the news. They've been in the news a lot as far as quarterbacks and whatever. But so there's what's called a Dow group that's trying to purchase the Denver Broncos. And Dow is DAO, not the Dow Jones, it's the index, but DAO, which stands for Decentralized Autonomous Organization. So what it basically is a group of investors that are trying to buy the Denver Broncos, and it's decentralized, just like how crypto is decentralized, because there's not one person who is the owner. All the NFL, NBA teams, they all are owned by one person, one individual, right? Except the Green Bay Packers. So
except for the Green Bay Packers. So basically, it will be able to. I think with the Green Bay Packers, a little different because you have to be a citizen or resident to be. I don't know exactly how it works, but this will essentially allow us to everyone to, I guess, be a part of the Denver Broncos. But the interesting part is all the rest of the NFL teams have to vote you.
The other owners, yeah. So
both the owners in. So we'll see if that actually happens. But with Ian's words, he thinks this is just there's a bigger play at with the Dow is trying to do. So this is just the start of it. They're trying to see if they can get the power into the entertainment football sector, and then he believes that they'll try to move on the political side as well.
Which would be, that would be mind blowing. So just like we've been talking about, if you just notice the shift that's happening as far as Kanye with the STEM player, there's a shift of getting away from these centralized organizations, in a lot of different areas in life. We've already talked about two of them now. So it's just interesting. All that stuff plays into the market and what can happen and how things shift. It's all, a lot of things are shifting to things being decentralized. Because it gets away from corruption. So that's something that's interesting, and we'll definitely be have our ears and eyes open for what comes next with that. So the last, almost last, or we're running pretty good on our time. Second to last thing we're going to talk about, which we talked about last week, which has been in the news now for all of us, is Vladimir Putin in Russia. Still making noise, still beating a drum over there. And is it serious? Yeah, in Ian's words, it is serious because Putin is smart and he's powerful. There's a lot of questions too. Rashad was talking about is he could be just he could just be doing a lot of bluffing, because when the bluffing happens, it hits the news and it goes around the world and it causes havoc in the markets. So he could just be pulling strings and and watching the madness happen
because he's so powerful and because he's so fearful. So when he does do something, it's like, hold on, is he really about to do it? Is he really about to pull it? So you got to pay attention to it no matter what.
What up, JL? Thanks for tapping in, bro. So it's important. Like we talked about last week, what Russia and China is trying to do, it can cause havoc on the markets. And if they team up and get the things done that they're trying to do, with Russia trying to take over Ukraine, and which I thought was interesting too, because I had no clue, like, why are Ukraine, right? And so I guess it's because the Soviet Union used to control Ukraine back in the day, right? But then it controlled a lot of those European countries. But after the war or whatever, that they lost that control, and Ukraine was able to be its own country again. So, they clearly have history and they have resources, and that's why Russia is wanting to move in on them. And so yeah, they can really shake up the market, especially if they get things done how they want to with teaming up with China. What Ian, or not Ian, I keep saying Ian. Excuse me. What Rashad was talking about is if China and Russia. Actually, I think it was Ian. Whatever, it doesn't matter. If China and Russia team up and are able to get done what they want to get done, and then are able to move in on South America, that it would really control some things, and we as America would lose control over a lot of things. It's a lot of economics at play. Oh yeah. Also, too, on that, why it's bad for this to happen is why it would be a heartache on America. Why it'd be so hard for us to handle it is because it will drain our resources. Right now, our country is high in debt and been high in debt for a long time, but it's just getting worse. We have internal conflict, and so if we go into a war, that would be an external conflict, and those are like three strikes almost that can really kill the economy and cause a major pullback when those three things are happening all at once. So yeah, Russia, Ukraine, China, it's all something for us to be paying close attention to. Yeah.
Sure.
So yeah, that's our quick little Vladimir Putin segment. Getting ready to wrap it up here with these last one or two now. So yeah, they ended it with Ian giving 3 tips to any newbies that are in the market. He always, like we've touched every episode, 2 Tech 2 Index is one of them. But the first one is picking 2 stocks for long term, staying in those. Staying in those long term, and like we said, a top 5 company, please a top 5 company, especially in times like right now, top 5 in that sector, and get to know those companies, study them, know the ins and outs, how they operate, their earnings, all that stuff. Number 2 was for swing traders, use the 12-hour chart and the 90-day chart. This is why we also have talked about plenty of times on how learning technicals is important, so you can see what's happening on the chart. It's really not that hard. My first time learning technicals, I watched like a 20-minute video, and it gave me a great grasp of it. Then I read a book on it, which we've talked about, Charting and Technical Analysis by Fred McAllen. Read that, and it,
Great book. That'll really dumb it down for you. Really like, yeah. Go ahead.
Yeah, it'll dumb it down, and it'll make it so you can see what's happening in the charts. You won't just be looking at lines and bars and stuff that's moving around. You'll really be able to look at it and see, okay, this is happening, that's happening, and that's when with your trade.
That's when you'll be able to see your that's when you'll be able to see your entry points and your your buyout points and all that good stuff. You'll know how to read that.
Yeah. And so yeah, 1, 2 stocks long term, 2 swing trade. When you're swing trading, 12-hour chart and 90-day chart, and then 3 future trading, which I have been more intrigued about future trading. I want to learn more about that, but heavy in contracts if you're going to be trading futures. So yeah, those are the 3 things to do in the market as a newbie. Yeah. You guys have any questions? Darius, I think you got a little bit there at the end to wrap it up that they talked about.
Yeah, so Rashard, obviously with the business mindset, entrepreneurs, network tips was to listen more and to talk less. Obviously, it's always good to give information, but sometimes it's good to just let someone else talk and listen to what they have to say, and you might find some gems in that aspect. And then another one was be prepared. So obviously, as you're listening, as you're approaching new people that you meet, be prepared to give your elevator pitch. with whatever you do, right? You know, you don't want to be unprepared to where when they ask you a question or what do you do, and you're not fully prepared to give them, you know, the right answer, right? And you want to be smooth with it. So have your elevator pitch, have, you know, as an entrepreneur and all that stuff. So those are a couple of things that they were talking about, just networking tips, to just, you know, as you're moving through the day.
Have you know, what's your value you're bringing, you know, have that ready for, you know, whoever you're trying to get into business with, you know, and get in those rooms, you know, get around those people who are doing the business that you want to do. Get in the rooms with them. But, you know, that's how you make connections. That's how, you know, that's how it starts. Yeah, I mean, that's about it. Also, Ian was talking about, alongside of your investments, you want to have a business. So, you know, build your business alongside of your investments.
They go hand in hand. He said, don't try to do one. You got to do both.
Then also, I kind of skipped over earlier, but I just want to touch on it real quick. With everything pulling back, like crypto as well, pulling back. If you look at like, you know, normal pullbacks in crypto charts and stuff, if you look at like a 10-year out for a long-term investor, you know, your returns are going to be 10 to 50x. You know, so those are, I mean, long-term investing is the way to, you know, it's the way to go, and it's the way to get your gains. And I don't know about you guys, but 10 to 50x on my investments sounds amazing. I'm down to, I know I'm gonna have money in my account for the next 10 years. I pray to shit. So some of that will be in these positions, you know, and especially for those top ones, you know, the like we said, top 5 in each sector, and then also the top cryptos. If you're gonna go into to the real cheaper ones and the ones that are, you know, just coming up and stuff, please do your research on them. But, you know, a lot of the big cryptos are on big pullbacks right now. So it's great buying opportunities, you know, especially for long-term investing.
Yes, sir.
Yep. I got you, Malachi, bro.
So if you guys got any questions, you know, feel free to hit us, you know, in the comments, DM us. You know what I'm saying? Because, you know, we definitely want to answer those questions, you know, either next show or next episode. We got you. So just go ahead and DM us, or if you guys have got any concerns or questions about any stock that you're in or want to go in, let us know about it. You know what I'm saying? That's, you know, that's what we're here for, you know, to talk to, you know, to kind of brainstorm together, you know, to kind of figure out what, you know, if it's a good stock or if it's not, and all that good stuff. So definitely tap in with us. Let us know what you guys are feeling or what you guys are seeing, because obviously we don't have everything. We're kind of just going off the highlights. So if you guys heard something else, let us know, and, you know, let's talk about it. So we appreciate y'all. You know, square knowledge, you know, that's what we're all about, is, you know, gaining that knowledge for everyone to, you know, to eat, man. You know what I'm saying? That's the whole game plan for us.
Let us know, man. Let us know if something's not clear what we're talking about. Let us know, please. We'd love to dive deeper and, you know, to perfect our craft. We want to do this for y'all, man. So let us know. We appreciate it. Compass stock. Let me look at Compass. There we go. That's what we like.
She's talking about the
Compass. Hold on. Let me look them up. Do you know their ticker? There's a lot of companies called Compass.
He's talking about Compass Real Estate. They're public. I forget what their ticker is. Hold on.
Let me see.
What is their ticker? She's laughing. That's my homegirl, Abigail.
Okay. What up, Abigail? Okay, I think I have something here, but why doesn't it say it's ticker? I want to pull it up on TradingView. Compass Inc. God damn, can I get the ticker?
I think it's a COMP. COMP.
Let me see.
They actually just went public at the beginning. I think at the beginning of the year.
COMP. Okay, so it's it's a $7 stock right now. It has been in a downtrend since it looks like it opened up in April of last year. So they've been in a steady downtrend since then. A $7 stock. Typically, anything under $10 is considered a gamble. So I personally don't. I have done things cheaper, under $10, but I pay very close attention to it, and I won't. So if you were to buy it now at $7, I'd put a stop loss in, say at like $5, $4, so that I know if it keeps dropping, I'm gonna cut my losses that soon, So, but yeah, like I said, it's a $7 stock, so it at where it's at right now, it's considered a gamble for sure, a high gamble.
And then, but because obviously, if the company's giving you stocks,
Yeah.
you know what I'm saying, if they're, definitely take them. Let it grow, because obviously, so Compass is a real estate company who I used to be with, and yeah, so if they're giving you stocks, or putting it in your, matching you, or whatever that case may be, go ahead, let it sit there, let it do its thing, but hopefully it'll go up. But definitely, if you're putting your own money, definitely just keep watch it, for sure, because that's definitely something that's going to go up and down. But they are fairly new, so they could be having some new stuff coming out to help them, or growing a little bit more. So
yeah, they've been trading sideways for about a month. They're 50 days pointing down a little bit. I would wait for at least an uptrend to start, because $7, you're only $7 away from it being zero and being out. So yeah. So yeah, thank you. Appreciate that question. Hopefully we gave you a good answer to chew on a little bit. But yeah, I think that'll about do it then for you guys, man. For us and you guys. For until next week.
Yeah, we appreciate you tapping in. Again, if you guys have any questions, DM us. You know what I'm saying? Like, just like that. You know what I'm saying? Obviously, we might not know the ticker, but we'll search it. You know what I'm saying? As you can see, my guy Gucci, he on it. You know how to read that chart. So we'll definitely do our best. Again, we are not financial advisors. This is all just entertainment, education. We're trying to learn just like you guys. So hit us up. Appreciate y'all tapping in. Y'all have a great night.
Yes, sir. Square Knowledge, Market Monday Review. You know what time it is.
Know what time it is. 12 stand up.
Peace, y'all.
All right, y'all. Y'all have a good one.
All right.
All right, bro.